All right, so got some news for you. I am licensed now in 13 states. So what that means is if you live in one of the 13 states that I'm gonna shoot off here, you can work with me and I can help you either refinance or purchase a home. So let's go through those states together. If you are living in one of those states or you know somebody in one of those states, definitely keep me in mind if you need someone to help refinance or with the purchase, because that's what I do all day, every day. I pre-approve people for home purchases and I get people approved for refinances as well, to lower their interest rate, lower their term, help them save some money, pull some cash out, whatever it is you want to do with your home, I can certainly help. So let's go through those states together just so you're aware. So Alabama, Arkansas, California, Georgia, Illinois, Iowa, Kansas, Michigan, Missouri, Virginia, Washington, my home state, Wisconsin, and Wyoming. So if you live in one of those states and you're looking to buy or you're looking to refinance, I can certainly help. So I'm going to share with you what refinancing actually can do for you. I'm going to give you an example. Let's say you own a house, you maybe owe $400,000 on your current mortgage, right? Let's say you have a 3.5% interest rate. So your principal and interest payment, that's around $1,796. If you were to refinance into into the same amount of loan, so you refinance, you got a $400,000 loan, your interest rate, let's say, went from 3.5% to 2.5%. I'm going to share with you how much that can actually save you in terms of interest over a certain period of time. So if you had a $400,000 loan, your principal and interest payment at 3.5% is at $1,796. If you were to refinance that same amount of loan and got a 2.5% rate, you would drop your payment by $215.70, which would make your payment $1,580. If you take that to term, so if you basically amortize that mortgage throughout the entire 30 years, your savings for that entire 30 years is $77,650. So you can see right there how refinancing into a lower interest rate is going to save you money over the long term of your mortgage. So everyone's typically getting a 30-year fixed or a 15-year, 20-year, 25-year fix. Really depends on your situation, but the idea is, look, you're going to be paying your mortgage anyway. If you're living in the house more than sometimes a year or 2 years because costs of the refinance are low, it makes sense. For this example, let's just say that your costs of doing this refinance, or let's say it's $2,000, right? So after 2 years, if you were to go from a 3.5% to 2.5%, your interest saved would be $79.18, so $7,918, which means you, after 2 years, are coming out of this loan with $5,000 savings, basically. So you pay yourself back from the savings from whatever you put in for this refinance. So it costs you $2,000 for the refinance. After 1 year, you're saving $39.81 in interest. So your savings outweighs what you paid for the refinance. Obviously, this is an example. Well, this is not obvious. This actually happens all the time, where somebody has a mortgage maybe 2 years ago. They get into 3.5%. Maybe it was an FHA loan and they want to go to a conventional loan, or they want to go from a conventional to a conventional. Maybe now they have some equity in the home, so they're looking to maybe drop that mortgage insurance. Maybe they're even looking to take some of that equity and make some upgrades to the house, or just put some cash away for savings or children's funds or college or whatever it is. You can take some of your equity that you've built up over the years that you paid in your mortgage, refinance into maybe a bigger loan. Maybe it's a little bit more than $400,000. Maybe it's like $420. Let's say you want to take 20 grand out. But if you were to refinance and you have access to these historically low rates, it makes sense because you're dropping your payment and you're taking money out. If you're going to be in the house anyway for the next 2, 3, 4, 5 years, it makes sense because you are saving. You're saving on the interest. you know, because you're not paying as much interest over the term, or even after a couple of years, you're getting your money back that you paid in to the refinance. So it makes sense if you're looking to do that. So that's just an example, guys. If you're looking to refinance, or you're considering to refinance, I highly recommend reaching out to your local lender. It doesn't have to be me, and just seeing what their rates are. I'd recommend going maybe to bankrate.com. That's where my company's listed, and you'll see real quick. You can actually do a quick little calculation of your scenario, and it'll spit out what the rates are today and what you could expect if you were to move forward with refinance. So just want to give you that quick update, let you know that I'm licensed in 13 states now. If you want, you can go to my website, saeedhammoud.com. You could actually get yourself an application. You can figure out, you know, if you're buying a house, you can see how much home you qualify for. If you're refinancing, you can see exactly what you can do based on your scenario. I'd be happy to help. Otherwise, definitely check out what you can do with your local lender or your bank, seeing if they're able to get you a lower interest rate, because it just makes sense. If you're already paying a mortgage anyway, you might as well save some money throughout the years that you're paying on it. So hope you guys are well. I know I've missed a couple weeks. I'll be back next week with a new video. Hope you have a great 3-day weekend, Memorial Day weekend. I'll talk to you guys later. Take care.